The latest read on monthly inflation shows it has eased in the June month, down 0.1%, taking that headline monthly rate to 3.8% over the course of the 12 months to June. And of course, this is the last major data release before the RBA makes its August rates decision on the 11th of August. Now, to break this all down and discuss what it means for interest rates, I'm joined by Cherelle Murphy, Chief Economist at EY Oceania, and she joins me now. Cherelle Murphy, let's just go through these numbers because there's a lot of data coming out from the ABS. Now that we have the monthly series and the quarterly series, it can get quite confusing. As I said, the monthly figure has come in a little weaker. I'm just looking at the quarterly figure for the trimmed mean. That's also slightly weaker. Can you take us through the numbers?
Yes, good afternoon. That certainly is looking a little bit better, isn't it? With both the trimmed mean coming in at 3.6%, which is unchanged. It's still too high, I will emphasise, though, even although it could have been worse, and the headline number coming down on annual terms. The Reserve Bank does prefer to continue to look at that quarterly number. It is more comprehensive, and it is, they consider still to be probably a little bit better of an indicator as to how price movements are going on in the economy. And on that basis, I think there is a little bit of good news in this, in the sense that it certainly does look just that tiny bit better, which means that the momentum in price growth is at least slowing. Now, is it slowing enough? That becomes the big question from here. And I suspect that the Reserve Bank is still going to be pretty nervous. A trimmed mean of 3.6% when they want inflation around about 2.5% isn't good enough. Does it get to their target band in time? Of course, we don't know the answer to that yet, but it's certainly moving slightly in the right direction.
Yeah, that's right. As you say, it hasn't gone up on all accounts. The headline quarterly rate for the year is down to 4% from 4.1%. That trims mean down to 3.6 from 3.7%. And on a monthly basis, we're down from 4 to 3.8%. But the Reserve Bank wants to get inflation between 2 and 3%, really at that 2.5% level. We are well outside of that on any measure.
Yeah, that's right. And look, you certainly wouldn't have expected it, of course, to be in that zone in this particular quarter, because we've obviously got ongoing price pressures coming through from the Middle East situation. And whether or not the oil prices come down, there are still many other commodities that are affected by what's going on at the moment. There's also the domestic demand, which has been running probably a little stronger than the Reserve Bank would have expected. And the labour market still remains fairly tight, it seems, which both tend to be indicators of the fact that the economy is kind of running up against its capacity, or running at least at its capacity, if not struggling a little bit. So that means that there's a lot of pressure to come out here before the Reserve Bank gets to where they need to be. They are patient in the sense that they don't need it to happen overnight, but the question now becomes, are they satisfied that this is enough to get them to that point where they can hold rates where they are, let the 3 rate hikes that they've already put in place this year do their work, and get back to that inflation target eventually.
And that was the point that Michelle Bullock was really making in her address in Sydney yesterday. Do you think at 0.8% for that quarterly trimmed mean number, it will be enough to keep them on the sidelines on the 11th of August?
I think it's going to be a very close decision, to be honest, Alicia. I think it certainly could. It's a much better scenario than, of course, had that number been higher than they had expected. And so it's going to be, I think it's going to be a very close call on the next meeting, which, as you say, is coming up in 2 weeks' time. There's not a lot of additional data that's going to influence them between now and then, of course, subject to what happens in the rest of the world and particularly in the Middle East. However, I would think that there's going to be some that are going to be supportive of a higher interest rate, but there will also likely be those who are happy to sit where they're at and hold the cash rate where it is and let those previous cash rates do its work.
And just finally, what other information will we get out from the RBA on the 11th of August? And what else are they going to be weighing up? Because, of course, we had a very strong, reasonably strong read on the employment market last week.
That's right. So this is the quarter where they'll be looking at their forecasts again, or re-releasing their forecasts. So that's going to be a really interesting set of numbers to have a look at, because ultimately it is the forecast of inflation and how long it's going to take to get back to the 2.5 or mid twos on the underlying and the headline inflation that will really determine whether or not they're happy with where things are at. So those forecasts are where we will be looking, particularly the inflation forecast, but also, of course, the labour market forecast, to see how the developments over the last 3 months may have changed their perceptions of where the economy is going. And as I say, if they're happy with the path that we're on, the fact that the inflation pulse seems to be just fading that little bit, then it seems more likely then that they would be willing to sit pat.